Joining us right now from Davos for the first time is Charlie Scharf. He's the CEO of Wells Fargo. Good morning.
Good morning.
How you doing?
I'm doing great.
You want to react to that? I'm just curious what you think about interest rates and the Fed, and maybe who you might even want to be the next Fed chair. How much do you care?
Care a lot, but thrilled with the choices that are on the table. I think they all make great choices, and we've got a process to get from here to there, and I think we're in a really good place.
What do you think about interest rates right now and his growth trajectory?
Yeah, listen, I think, first of all, the growth trajectory is everything that we see is really, really good. And so it's more likely than not that growth will be stronger than people expect. And for us, as a U.S. company, where so much of our business is in the U.S., we feel great about it. Rates we can debate. That they likely will go lower, and that's probably a good thing for a period of time. How low they go, I think, is dependent on all the other data that we see, and I think that would be a pretty good place to be. And I think the markets would certainly feel good about it.
Okay. The other big issue, and I know you've been probably asked and have had to answer the question a million times this week: credit cards. You're in the credit card business.
I like the credit card business.
You like the credit card business?
Yes, I have one.
I assume you like the credit card business a little bit less if you had to cap interest rates at 10% across the board.
Yeah. So first of all, remember, the president has not suggested that rates get capped forever across the board. So just as we think about the business, it is a great business. It's a really important business. It'll continue to be that way. We offer products that are well below 10% for an extended period of time, so I understand that. I think we just got to be very focused on what we're trying to solve, and what we don't want to do is put in artificial price controls that could be harmful at a period of time where it matters most to Americans that need credit.
So Jamie Dimon, said quite publicly that he thinks this is dangerous, and the question is, how dangerous is it? What do you think the true ramifications of something like this, even if it was just for 1 year, would really be?
Yeah, I'm not sure what this is. I think we'll see. One of the things I've learned a lot from just watching the administration is they've got lots of ideas. They're very, very focused on the outcomes, and he's very focused on affordability. And the thing about this administration that I think is wonderful is they engage, and they want to get to the right answer. They want to do the work. They want to do the study. So, 10% everyone overall, I think, would be a real problem. But let's figure out.
But do you think it would have a meaningful reduction? I mean, there are a lot of people out there
reduction in credit
that need that credit. We were talking about, by the way, I think they were a partner of yours. Built put out a press release saying capping at 10%, but we were saying that might be a different demographic.
Right. Who are they loaning to?
First of all, I didn't see the press release. My guess is it was capped at 10% for a year, which is what the president asked for, which is what they would do anyway because of intro promotions. So my guess is that's pretty good marketing.
Pretty good marketing. One of the other big questions is housing. And the president has talked about two things. One that he was very explicit about is effectively going after some of the big home buyers. I think he's really referring to things like Blackstone and some of the other publicly traded companies out there, to tell them, we can't have you buying these homes because it's actually jacking up the price of homes. And then there's been a lot of scuttlebutt here. It has not come out yet about potentially allowing Americans to use their 401ks to buy, to put down a down payment, for example, on a home. What do you think of that as a mortgage originator?
Well, I don't really know enough about the issue of corporations versus individuals. I do think one of the things that has come out, anytime there's an inconsistency, whether it's between institutions, between individuals and institutions in terms of what it means from a tax perspective or whatnot, and when one person is advantaged, that's not a good place to be. So we shouldn't have a policy where it is more affordable for an institution to buy something than an individual. Right. It doesn't make sense, and it doesn't get to the right goal that we want, but I don't understand the full extent of that.
Hey, Charlie, just want to congratulate you on where Wells Fargo is and the turnaround that's taken place on your watch. I mean, it's something that the markets have obviously sat up and taken notice of. What are your plans from this point, though?
Yeah, I think, well, first of all, thank you. Yeah. And as I think I've said, when I came on here, it really is tens and tens of thousands of people that have done the work, and so I'm appreciative to all of them. We're able to compete on a level playing field now for the first time since 2018. Yeah. And so when you look at our results, I actually feel great, not just about the fact that we put these issues behind us, but that almost all of our businesses are growing today, and we were able to do that while not being able to grow loans, grow deposits, grow inventory, and things like that. And so now we're able to do all that on behalf of our customers.
Shackles have come out.
Exactly. And by the way, the market didn't give us any degree of reprieve because we had that. They had the same high expectations for us. And so our balance sheet's up 11% since the asset cap was lifted. We're going out to companies who we had to ask to take deposits away to say, please bring them back. We're increasing our inventories and financing. We're growing loans again. And so, we're still very, very conscious of being, what Wells Fargo is, thinking about our own risk tolerances the same way, but being much more on our front foot. Yeah. And I'll tell you, one of the most thrilling things is to see people inside the company feeling great and being in the marketplace and feeling like they can compete again.
Yeah.
When you think about sort of the next, actually, you know what? I want to go back to the housing for just 1 second because we didn't get to the second part of it. For the 401k piece,
yeah.
Do you have a thought on that?
I think it's super interesting. I think under the right circumstances, depends on the amount. I would think about level of concentration within 401k and things like that. But it should be a long-term investment, locked up in a long-term plan. The devil's in the details, but I think it's really interesting. I
was going to mention your investment bank has actually had quite a lot of success, and people don't always think about Wells Fargo in that context. And kudos to someone I think we both know, Doug Braunstein, who's been helping, and a whole bunch of other amazing people with that group. What does that look like 5 years from now?
Yeah, listen, the investment bank is one of the great opportunities that we have. It's one of the great businesses that we currently have, and Doug's done a great job. Fernando Rivas runs the business. Tim O'Hara has done a great job in terms of bringing talent on. Listen, we've always been in the business, but we've always wanted to be below the radar screen. It's a natural progression from using your own balance sheet to finance companies, to give them access to public markets, give them access to broader degrees of private credit, provide financing advice. And so, what we've made the decision is that we don't want to keep it under the radar screen. We want to grow the business. We want to continue to serve companies of all sizes. We have competitive advantages. We have treasury services relationships. We lend a huge amount of money to these companies. I think they like doing business with us and have liked doing business with us for long term, and they want more options. And there aren't a lot of companies out there that can do the types of things that we did recently for Netflix with the size bridge loan that we made, or what we did for Quikrete in the non-investment grade market. So this is a journey. I always say the world is littered with companies that have tried to do this and failed. They've failed because they've hired the wrong people. They've done the business that no one else wants to do. They've compromised. They've taken too much risk. And so we're trying to be very, very thoughtful about growing this at the right pace. And we hope it becomes a bigger part of the company, and quite confident that it will be profitably with high returns.